Hello everyone, welcome to the YouTube channel of Vinod Kothari. I am Prapti Kanakia. Recently, we are hearing a lot about FPIs and more specifically about the disclosure requirement of beneficial ownership by the FPIs. So why is the government seeking disclosure about the beneficial ownership from FPIs? In this video, we'll try to figure out what circumstances led to government seeking such disclosures and what would be the consequences if FPIs do not provide these disclosures. So before understanding the disclosure requirement and the government's intent, let's understand what is FPIs. In India, we have pooled investment vehicles or funds like mutual fund, alternative investment funds, who pool investments from retail public and invest in Indian securities market. So if such funds are set up in a foreign jurisdiction and are wanting to invest in India, then they can invest by obtaining FPI registration. So basically, they are institutional investors. However, there can be exceptions like a company, individual can also register themselves as a FPI. So and when we look at the shareholding pattern of Indian equity listed entity, FPIs are shown in the public category. And so as per government's requirement of minimum public shareholding, that is at least 25% of the shares of equity listed Indian entity should be held by retail or should be held by the public and not by the promoters. So rest 75% the promoters can hold. So what promoters used to do was they used to hold stake in these FPIs, and in turn the FPIs used to invest in their entities. So here promoters might be holding more than 75% through FPIs, but since FPIs are shown in the public categories, the shareholding of promoters would not be clubbed, and therefore they were circumventing the provisions of minimum public shareholding. As a solution to this issue, SEBI came up with a circular on August 24, 2023, wherein it mentioned that certain FPIs would be required to provide the details of their beneficial owner on a full look-through basis and without any threshold. So what does that mean? For that, we will need to understand what is the existing requirement of providing the disclosure. As per the existing requirement, in an FPI, if any shareholder is holding more than a certain percentage, then in that case, we'll find the beneficial ownership of that particular shareholder. And the FPI will inform the details of the beneficial owner to the DDP. Now, what government has done is, if a shareholder is holding even below the prescribed threshold, then also you will need to identify the beneficial owner of that particular entity and inform the DDP. So as a result, all the FPIs will now need to understand or will need to seek disclosures about beneficial ownership from their shareholders and intimate the DDP about who is the beneficial owner in that entity. Also, the other thing that the SEBI observed was, as per press note number 3, which was issued by government in the year 2020, which stated that investors from land bordering countries will, if they are wanting to invest in India, they will need to take approval from government before investing. However, FPIs are not covered in that press note, which means that if FPI is from such a land bordering country, or the beneficial owner is from land bordering country, in that case, they are not required to obtain government approval. So as to ensure a check on such FPIs as well, government came up with this SEBI circular. And there were also cases where the beneficial owner used to hide his identity by dividing his shareholding. That is, since the prescribed threshold is 10%, what the beneficial owner would do is he would segregate his holding to less than 10%, so as his details are not required to be provided by the FPI to the DDP. And for this purpose, the government came up with the circular which mandated that the FPI will require to identify the beneficial owner or all the shareholders on a full look-through basis and without applying any threshold. So now let's look at which FPIs are required to provide these disclosures. I'll just share my screen. So those FPIs who have invested more than 50% in a single Indian corporate group, means those FPI who are having concentrated investments in a single corporate group will be required to provide the disclosure of beneficial owners. And also those FPIs who have invested more than 25,000 crores in the Indian equity markets. Those FPIs will be required to provide the details of their beneficial owner. So this is either or condition. Any of the condition, if gets triggered, the FPI will be required to provide the disclosure. However, there can be FPIs who are holding more than 50% in a single Indian corporate group. But when we look at their global investment, the amount becomes so insignificant. And therefore, the government has stated that if the Indian investment, when compared with the global investment, happens to be less than 25%, in that case, the FPI will not be required to provide the disclosure. And in case of FPIs who have invested more than 25,000 crores in Indian equity, if this amount happens to be less than the 50% of their global AUM, in that case, the FPIs will not be required to provide the disclosure. There are also certain other exemptions where FPIs are not required to provide the disclosure. Like let's say there is a government who is registered as an FPI in India. In that case, there is no chances of such government FPI being used as a route to circumvent the provisions of MPS. And therefore, SEBI has identified certain FPIs which will not be required to provide the disclosure. So one is government or government related investor. Other is public retail funds. So these funds usually have investments from retail public. So retail public will not be interested in circumventing the provisions, etc. Exchange traded funds, which are having less than 50% of exposure to India and India related equity, which means they are having more huge global investments. So when comparing the India investments, it's very less compared to the global investments. And therefore, these FPIs too are exempt. FPIs which are not able to liquidate their investment, which may be because of a court order, or maybe there is some government restrictions that you are not allowed to sell the investments. In that case, the FPIs are not required to provide the disclosure. FPIs which have recently started the business, then the FPIs which are in the process of surrendering their license. That means they are wrapping up their business from India, and therefore there is no requirement or burdening them with the disclosure requirement of providing details of beneficial owners. And the last one is the one we have discussed, is that the pooled investment vehicles, that is FPIs. Such FPIs are already regulated in their home jurisdictions, and their investments in Indian corporate group happens to be less than 25% of its overall global AUM, that is asset under management, and their investment in Indian equity markets is less than 50% of its global AUM. So now if any of the FPIs if any of the FPIs who have investments more than the prescribed limit, in that case, they will be required to provide the disclosure. So if the FPIs to whom the circular becomes applicable on 1st of November. So if the FPIs who are covered under the circular as on 1st of November, they are given a timeline of 90 calendar days to realign their investment. That is to bring down their investment below these prescribed thresholds. If they are able to bring down their investment, they are not required to provide the details of their beneficial owner. However, if they don't decrease or reduce their investments, then they will be required to provide the disclosure of their beneficial owner within the next 30 trading days of completion of this 90 calendar days. Now, if after the applicability of the circular, if the same becomes applicable to any FPI, in that case, the FPIs who are having concentrated investment in a single Indian corporate group will have a timeline of 10 trading days to reduce their investments from that entity. If they don't, then they will be required to provide the disclosure within the next 30 days. And in case of FPIs who have overall investments of more than 25,000 crores in the Indian equity market, they will have timeline of 90 calendar days to reduce their stake If they don't, then they will be required to provide the disclosure of beneficial owner within the next 30 trading days. If they are able to reduce their threshold, if they are able to reduce their investments within the thresholds, in that case, the requirement of providing beneficial ownership details is not required. Now, what if they don't provide the disclosure within the timeline specified? In that case, SEBI has said that if they are not providing the details, then the FPIs who are having concentrated investment in a single corporate group, they will not be allowed to make further investment in the group for the next 30 calendar days. And if they are having, if they have invested more than 25,000 crores, they will not be allowed to make any further investment until they bring down their investment. Also, the FPIs will be required to surrender their license within the 180 days. And within 180 days, this FPI registration will also become invalid. That means they will have to sell off all their investment and surrender the license to DDP. And during the period of these 180 days, voting power of the FPI will be freezed. That is, here the listed entity will have to ensure that the voting power of the FPI is freezed to the actual shareholding or shareholding that corresponds to the 50% of its equity AUM. So here the actionable happens to be for the FPI that if their investments is beyond the limits as prescribed, that is more than 50% in a single Indian corporate group or more than 25,000 crores in the overall Indian equity market, then they will be required to provide the disclosure of beneficial ownership. Here, the DDP will be coming out with a SOP, providing a solution for the operational problems that will be faced by the FPIs in identifying the beneficial owners. And the SEBI has also mentioned that the stock exchange and the depository will maintain a repository of the entities which will form part of a single Indian corporate group. So pursuant to this, BSE has come up with a circular wherein it has prescribed the prescribed parameters basis which it will be identifying whether an entity forms part of a single Indian corporate group or not. Also, it has started sharing mails to the listed entities to identify whether the group that they have identified for the listed entity is correct or not. So this is all about FPIs. In case you have any queries, you may post the same in the comment section below. Thank you.